If you like trading stocks and you want the big returns, the 200%, 300%, 400% and more per trade, it would seem options are the way to go. But how to trade them? They're quite a complex instrument. First thing you find out, you're faced with a whole bunch of tables. Then you've got to learn about time decay. Then there are different variables. Exotic names like iron condor, the butterfly. It can be quite overwhelming if you've only just come to trading. Personally, I wouldn't jump in on that until you've been trading stocks for quite at least a year, maybe even 2. That's how my next guest, Riz Memon, started. He started trading stocks, then moved on to options, found it really difficult, which kind of it surprised me because he's been so successful. I just thought he was a natural born trader. Well, it's interesting listening to his story. He's done very well, but come through some really tough times. Here's our conversation. We got together end of August 2024. So Riz, hi, we finally get to meet. How are you today?
Good, yourself?
Yeah, I'm fine. Yeah, after some technical crap that bothered us in the first 5 minutes, but all good now.
Yeah, I'm glad it sorted itself out.
Yeah. And where are you based?
I'm in Canada. I'm
Oh,
in
Canada.
Canada. Yeah, so I'm in the province of Ontario and an hour west of Toronto.
Okay. Yeah, I was
Yeah.
born in Montreal, so
Oh, really? Okay.
originally my country. I look you up and find that you're an options trader. Did you get in at that kind of level, or did you start with CFDs and work your way to
Yeah, so I
trading
trade
options?
options, I trade stocks, so I do both. Like I have my style and strategy that incorporates both. Because obviously options are based on the underlying, right? The stocks. So for me, I don't trade CFDs. I haven't traded CFDs, but I started with stocks back when I was 16 years old, and that was 2008. So it's been a a long time. I started, let's say, I think it was Q1 or Q2 2008, and then obviously we know how that went near the tail end of 2008. So I was just starting, 16 years old, didn't know anything, just a little bit of money. Um, but yeah, I started with stocks. I didn't, even stocks, being able to trade as a retail investor on your phone because the original iPhone had just come out. I didn't even have data. I was just like getting going. I didn't have real time data. I had just started college a year before, or sorry, just about to start college. I just finished finishing high school. And then when I got into college, I remember I'd had to go into the library to access Yahoo Finance. And then the quotes that I would see for like Microsoft and everything, that was delayed by 15-20 minutes. I didn't have real time data for some time.
Yeah, so you can hardly do the 5 minute charts, can you?
Yeah, no, I
Yeah.
see. That's the thing, right? Like things have progressed so much. Obviously, the past few years it's been, stagnant. But before that, like the last 10 years has been the biggest shift in terms of access to software, real-time data. Like options trading didn't wasn't a thing. Like if you wanted to trade options, it was like you had to be at the SIBO, the Chicago Board of Options Exchange. You had to be on the floor. You had to be an institutional side of things because the fees, the data, just wasn't possible. I remember even when I was starting in 2008 with stocks, like it would cost me here in Canada, and there was no $0 trading, there was no free trading, there was nothing like that. I'd have to pay about, I think it was like $20 per trade, and it was web based. Before that, not too long, before I started, you'd have to make a phone call to place a trade, right? So uh, I feel old. I feel old when I see all the people trading options now, and it's like $0 trades, real time data, right off your phone, anywhere. Wow, like things have come up so far, and if you wanted to day trade or do all that kind of stuff, you just couldn't. It just wasn't possible.
Sure. How did you learn options? Because they're quite complex. I mean, the basic ones most people are familiar with if they've been trading, like the call and the put and so
Yeah,
on. But they divide into all sorts of different
yeah,
variables, don't they?
yeah. Their options are pretty much like their base level is obviously more complex than stocks, but then they just get more complex from there. So the base level is higher than just buying and selling or shorting stocks. But With options, I can tell you, like when I first heard of them, dived into them, it was like breaking my brain because I could not figure it out. Like puts and calls, I was like, okay, that's simple. Like buying a put and call, but then you can short, aka short sell a put and call. I'm like, it was it was honestly so difficult. I'm like, I literally thought I'm like, I can't do this. Like this is too much. Like I'm not a math person. I'm not a big studying type of, I'm not that's smart. I'm like, I don't know if I can do this. It doesn't make any sense. Um, and I think it was just pure, just grit, like this tenacity and just unwillingness to just accept that people, you got to be able to make sense of this. Like it's got to be able to be like it has to be done. Like people, there are people out there, and the more I looked into it, literally just practicing, testing waters, seeing how it works, losing money, making some money, losing money. Um, and it just was trial by fire. Eventually, as I progressed, then I realized, again, reading, studying, practicing, I realized, well, you can trade options, but there's certain types of option trades that you do that have more of a statistical edge. Anyone now can open up a brokerage account and then just buy a call or a put on whatever stock. Most often, they're going to lose money because they don't understand the intricacies of it. And you don't have to be like a math expert or a data expert or anything to understand or trade options. You don't. In fact, I have many students, hundreds and hundreds of students that learn to trade options from zero, like zero experience. Some of them haven't even traded stocks, and you're able to do it. So the understanding has come a long way. How did I do it? Just a lot of mistakes, a lot of trial and error, and just took a long time. Like that's the thing, right? I find now if you have the right people, the right guidance, the right community, you just expedite everything. You not only expedite your learning process, you also decrease the mistakes. Like I made every mistake in the book, like buying an expiry too close, or buying an expiry and not knowing, you know, what DK is, and all these kinds of things that just are so important to trading options, but most people don't know, right? So it was really learning the hard way.
Did you have to kind of wean yourself off the simple, really high risk options like the calls and the puts?
Yeah, yeah.
Where you can just lose everything in that trade.
So when I first started, I remember seeing like social media was relatively new, and like options weren't as big of a deal. Like they weren't as popular or like mainstream as they are now. But I remember like placing a trade. I'm like, holy crap! Like I can make hundreds of percent on this, like in a short amount of time. And I was like, wow, okay. But then I realized, just because it's tracking, I was tracking my trades, logging how much I made, how much I lost, when I made money. And I realized most of the trade by buying options, buying puts and calls and whatever stock, the wins would be far and few between. Because usually when you buy options, there's less of an edge. Like you have a lot of things against you. Time value, you got DK, there's a lot of things against you when you're buying options. And then I realized, I'm like, wait, there's the opposite side. So you can sell options, short sell options, and there's different strategies you can use to kind of hone your risk and cap your risk. But I realized very early on that if I'm shorting options, time is on my side. The odds are on my side. So when I short options now, um, with my community, with my students, um, my win rate, meaning like the option expiring, which is the best case scenario, meaning I keep the premium, I get paid to do this, and then I keep the premium. That's the best case scenario. They expire like 98% of the time. So using these strategies, these methods that I've kind of taken and adjusted and adapted and tweaked, 98% time they expire worthless, keep the money. And even the 2% of the time that they do end up in the money, you can either close for a loss, which usually isn't too big a deal, or you can actually take delivery, because the stocks that we do it on are large caps, things that companies that we like and we know, right? I'm not doing it on like micro caps and small caps, right? So uh, for me, I found that that's the strategy I gravitated towards. And essentially, the way I look at it, it's like getting paid every week or every 2 weeks, because I do 1 to 2 weeks without expiry. That's kind of the sweet spot for me. And I find that you're essentially getting paid every week or two. It's like another paycheck, so to speak, right? That's how I kind of frame it to people. Obviously, you can't just go out and say, okay, I'm gonna get paid for doing nothing. No, there's risk involved. You got to know what you're doing, and it's a very intricate balance. There's some people that took the strategy and they're like, I want to scale this times 10. Then they get in trouble because they go too far. So there's a very, very intricate balance that I teach my students. And I say, look, operate within these margins, operate within this line. If you get too greedy on the other side, it could hurt you, right? On the flip side, if you have no risk tolerance, you have no confidence, you have no idea what you're doing, that's going to hurt you too. So operate within the margins.
Yeah, it makes sense. So what kind of option do you call that? They have all these different kinds of names. What do
Yeah,
you
so
call that?
there's different names. Like, you have like credit spread, debit spreads. Those are the two styles. But you got, like, a bear put spread or a bull call spread, all these kinds of things. For me, I keep it simple. So for me, I have this strategy where you just keep rotating this like clockwork, and I call it the raptor method. That's just what I call it. It's not, this is my name that I call it. And for me, it's the reason is, I mean, the reason I chose that name is because I like fighter jets. So there's one of my favorite jets is an F-22 Raptor. Okay, it's one of the greatest jets ever built. So it was just reason I picked that, and the way the strategy works is you first, not gonna get too technical, but essentially you short an option, and then best goal is, ideal is that it just expires worthless. You keep the money, keep doing it. If, like I said, those 2% of times it goes in the money, you can have two things, two choices. You can either take delivery of the stock. Maybe it's Apple. So then we'll take delivery of Apple. Obviously, you have to have the account size for it. And if you don't, then you close it for a loss. But you take delivery of Apples, and then you do short another option to generate income off the holding that you already have, right? At a price that you want to get rid of. So the way I frame it to students is, when I short the option, either it's a put option that I'm shorting, think of it like a limit buy order with an expiry date, and I'm getting paid for that. So it's like putting a limit order. Like if I do a short put on Apple for like $140 a share, expiring 2 weeks from now, that's like a limit order to buy Apple at 140, expiring in 2 weeks, and I'm maybe making, I don't know, let's say $100 a contract. Great. And then if it goes in the money, I take delivery at 140. I keep the premium still, and then I do a short call at a higher strike. Maybe I do it at 150. Then I get paid, maybe let's just say $2 or $1.50 for that. That's a limit sell. So I'm essentially doing it on stocks that I don't mind taking delivery of. I don't mind taking delivery at the price if it gets there. So it's almost like a win-win-win. And even if we don't get to the second or third stages of delivery, I'm still okay because I'm getting paid throughout. So it sounds, and people ask me like, "Riz, this sounds too good to be true." And I'm like, look, yes and no. One, there's no free lunch in markets. So obviously you have to have the account size, you have to have a margin account, right? Like you have to have the clearance, because most brokerages will say you can't do this outright. You have to have a credit spread, meaning you have to cover, I don't want to get too technical with the option strategy, but like you have to take another trade. It's a multi-leg trade to cap the risk. And sure, you can do it and still end up, the trades will still work. You just might have less of a margin of profit. But ultimately, the simplest way is I just short a put or a short a call outright, more risk. But the way I do it, I leave enough room. So I'm not going aggressive. I'm not getting greedy. These are all the key things. And when you do it, the compounded rate of return is extraordinary. And people realize, like, Riz, I rarely buy options now, because, like, what's the point? Like, I'm just burning money. Yeah, you'll have those one or two big wins, but then the past 10 are just zero, and there's no point. So this way is just, it opens people's eyes and it blows their minds, because they're like, I feel like I'm, like, almost like I'm cheating, like you're making money off of a thesis without having to take delivery of anything, and you're getting paid. Wow, like, and then you can win 95, let's just say 95% of the time you win. Wow, that's extraordinary if you keep repeating and compounding.
How did you develop this strategy? I mean, did you learn it from somebody and then, or something similar, and
Yeah,
then?
this strategy isn't like I didn't create the basics of it. I didn't create the basics of it. I didn't create the way I implement it, meaning the standard deviation that I use, the stocks that I do it on, the expiry that I use. That's more specific to my method. But the actual strategy of shorting a call, shorting a put, it's not something that is out of this world or I can take credit for creating, right? It's kind of like it's like saying, you're making something at home and you've got the salt, you've got, you know, the maybe you're making something pasta related, right? You got tomato sauce, you got the pasta, you got, some salt, you got some parmesan. None of us created those things, but how you use those things to kind of come up with your own dish, that's what it is, right? So my spin on it, my way and method of doing it.
And you mentioned account size. So, what would you recommend for options trading?
Yeah, great question. So for this strategy to do it and have enough, let's say, margin of safety, I say people should have maybe about a $20,000 account and a margin account. So you have a $20,000 account, and then with margin capability, you can take a couple of these trades every week or two expiry, and keep repeating. But you have enough, let's say, liquidity and margin in case. That's the key. Can someone do it with like 10,000? Again, it depends on the strike price, right? Like if someone has a $10,000 account and they short a put for like a on a $150 strike, that's $15,000 worth if we have to take delivery. And they have a $10,000 account. Now all of a sudden you're 150% exposed to that one single stock. It could be Apple, but that's still way too much. It's crazy. So you don't have to take delivery, but I'm saying assuming if someone does, right? They could take a loss, but then they're gonna lose maybe a few $100, couple $100 on a trade. Not the worst thing, but that's why I say have 20,000, 25,000, ideally, and higher. And that gives you more options. No pun intended. It gives you more choice, the ability to have multiple options, trades like these open. And if that 2% of the time, if you're doing it right, you do get assigned, you have the flexibility of either taking delivery or saying, no, this is too much exposure. I'm just going to close for a loss, right? But you need to have the liquidity. The worst thing people can do is one, obviously, trade this not knowing what to do or what they're doing. But the second is if they don't have the capital size. A lot of people get in trouble where their lack of capital effectively bites them in the rear because it's like a detriment. And I always tell people, if you don't have the capital size doesn't mean you have to do this and this only. There's other ways, other strategies. This is why I recommend people that are completely new to trading, completely starting. Everyone wants to go to options. I want to buy this put, buy this call, make 200, 300, 500% on a trade. No, it's all flashy. It looks great. But that's not the way to do it. I say start with stocks, learn to trade stocks, get used to it, get experience. Every stock has its own kind of personality, I say, and you can figure out how to trade. The goal is when you're starting to get that consistency, experience, it's not to make the most amount of money, it's to survive. I know in the first year when I started, I didn't make any money. It was 2008. So, and I was not day trading, I was buying solid companies. So, in hindsight, when I look back, I'm like, yeah, that was a great time to buy. But going through it, I was like, Apple in the gutter, Microsoft in the gutter. I'm like, are these companies going under? Like, I like these companies. Like, it was so new. I was like, what's going on? Like, financial collapse, crash. What is that? Like, I don't know what that is. These banks are going under. What does that even mean? Like, investment banks, they're, you know, we got Lehman Brothers going under. I'm like, Lehman Brothers, what is that? It was just wild. And the market eventually hit the bottom in March 2009. That was the lowest point. And so I was just, swing trading, and I was doing it on large cap. So that ethos, that style has still continued to this day. I still swing trade. I'm not a day trader. I swing trade. meaning I buy or short a position, I keep it open for a few days, few weeks, sometimes it's a few months, and it's on large caps. So that style has continued and it served me well over the years. I'm a big proponent in transparency, so like I share publicly on social media, when I make money, lose money, my account size. I've even gone as far as to share my account numbers, which wasn't a good idea, to the brokerage account, because I'm like, I want to be so transparent. Like, so I want people to know this is the same account. I'm not using two accounts and then showing one with the money that's being made, and then don't forget this. People do that, and I'm like, I want to share my account number so people know it's the same one account. Um, yeah, that didn't go too well as someone tried to log into the account and I got a notification. But anyway, the point is, it's 18 years. It's gonna be my 18th year, and it's been a long journey, long road. When I look back, I'm like, wow, I feel it. When I 5 years ago, even I was like, okay, now I'm like, every gray hair I have is like earned at this point.
I can imagine. How long did it take you to turn a sort of consistent profit?
So it took me at least 2 years. Like the first year was like just knowing the market fundamentals, like why is it even crashing, or why are companies going down, and what makes companies go up. I didn't have like any course or mentoring or tutoring, or like all I could do was just look up things online, try and buy what I think I liked. Didn't I knew about it roughly, like I knew what Microsoft was, I knew what Apple was, but other than that, I didn't know anything about fundamentals or financials or technicals. I didn't know anything about like charting or anything. I remember pulling up Yahoo Finance and the quotes were delayed by 20 minutes, but I'm like, all the other stuff, like you see beta, the price per earnings, I don't know any of that. I'm like, I have no idea what these acronyms mean. All I would understand was like there was a little like a thumbnail chart, and it's a line chart, and I'm like, oh, okay, the chart's going up a little bit, or it's getting going down, and that's it. That was the extent that I started with, just with small amounts of money, and I'm like, yeah, there's more to this, and I think because it was so, I would say, overwhelming. I think it's also one of the things that kind of kept me going, because if it was easy, if it was simple, I probably would have been like, nah, I'm bored, you know? And because it was challenging, I'm like, what does this mean? What does this mean? And I think it's that curiosity that kept me going. If I wasn't curious or I wasn't interested, then I'm sure I probably would have just said, no, forget it. Maybe just leave the money in there and then maybe look. And ended up being one of those people that just maybe do it like a passive investing or once in a while. I wouldn't have really dived in if I wasn't curious. And I'm glad I did, because that changed everything. It changed everything for me, right? And I tell students, people on social media, that the financial market is one of the greatest inventions I think human beings have come up with some amazing things over the centuries, but this is one of the greatest ones because it gives almost anyone with a little bit of money or and a phone or internet the ability to participate, uh, and almost to the level which was not possible even 10 years ago. And it can change your life for the better, but if not done right, it can change your life for the worse too. We've seen it. I remember in 2008, I remember it was newspapers would come out and they'd get delivered, and I'd hear about, like, people jumping out of windows, like high rises on Wall Street, because it was like, banks were collapsing, they were leveraged, there were institutions that were just getting destroyed, hedge funds and all that. I'm like, this is serious. Like, this is serious stuff. I'm here with my little bit of money, just doing whatever, but this is serious stuff. Um, so yeah, it's been extraordinary, and it's the ability to do great things with it. It's possible if you approach it with the right mindset, the right guidance.
Yeah, talking of mindset, did you have the right mindset early on, or did you really have to sort of go through hellfire to develop it?
Yeah, I'm glad I kind of approached it with a sense of curiosity, but with no sort of thinking of, I want to become rich and I want to make a lot of money and I want to make it fast. Because if I had that, oh boy, I'm pretty sure I probably would have just hung it up and said, forget it. Like, I'm not making much. This is stupid and wasting time. Why am I doing this? Why am I going? leaving class and going to the library. I could be going somewhere with friends or having lunch or doing something like that. I'm like, why am I doing it? It's that ability to just stay curious and not have any result in mind. Meaning, I didn't want to become the next Warren Buffett because I'm like, I don't even know what that means, right? I didn't want to become a hedge fund manager at that point. I did eventually as years went by, but I didn't even know what that was. So I'm like, I just want to understand how this thing is. Like these price moves up and down, and I've been a gamer. I'm still a gamer, all my life. So for me, it was like I like seeing the numbers go up. To me, my account value was and still is like a high score, and I think removing in some ways the money aspect, obviously it's not easy, it takes time, and I'm fortunate to not have to like rely on making x amount of money to pay the bill or pay for mortgage or rent or like car payment. Like I don't have any of that. Like I've liberated myself from all that, and it just allows me to be clear and trade for the sake of trading. um and I'm fortunate, and I know a lot of people can't do that because yeah, they're putting their hard and money. They're working 40 hours or 60 hours a week, and then maybe they're able to put some away, and they need this to work because it's a chunk of money. It could be a few thousand, tens of thousands. They need this to work. But for me, I was fortunate, being young, having the risk tolerance, not having any expectation, not trying to get rich or make money. It was just, I want to know how this works. I want to be able to do this throughout my life. I didn't think I'm gonna make it into like a full time thing and like get to where it is now or has been the past few years. Absolutely not. If you would have told me at 17 or 18, a couple years in, I'm like, that Ridge, you're gonna be doing this, and you're gonna have this kind of track record and this kind of following and this kind of, let's say, impact, I would have been like, nah, I don't even like make absolutely not. Like that's not me. That who is that? And it goes to show you bit by bit, sometimes that's all it is, just persistence.
Interesting. And what were you doing those early years? I mean, did you go to university, then get a day job and so on?
Yeah, so I went to college, I did business management, and that was it. I started doing well, and I started doing really well in my third year onwards. So like the first 2 years was like nothing. The markets were starting to recover, and the things that I had bought and sold and bought again were doing well. So, but it wasn't a lot of money. It was, I started initially with like $5,000. At 16, that's like to me was a lot of money. But I knew I made it because I was always a saver. I was always money minded. I was very like always into that. Even as a young age, like selling, collectible cards and all that kind of stuff. I just, you know, it was always something that interested me with money and growing the money. And so when I was in the market, I'm like, okay, 1 year has gone by, this whole recovery is happening, I'm making a little bit of money. But it wasn't because I was like going in and out and I'm generating a return because of my skill. It was the markets were going up a bit, and it took me 2 years to kind of really nail things down. What am I doing? Why am I buying? Why am I selling? When am I buying? When am I selling? Once I got into that, once I understood, okay, this is what fundamentals are, this is what technicals are. I made a lot of mistakes, lost money, made some money, but it took 2 years at least to just really get out of that kind of buffer zone and be like, okay, I can do this. And then I started, in taking margin, like using a little bit of leverage. Then I started diving into options, very basic level. And then it was like, okay, we're off to the races. And, it was extraordinary. I did really well. I was able to take money out, diversify into other businesses. I even worked in banking for a few years just to kind of get an idea as to how this kind of thing behind the scenes work, because I was always fascinated by banking, finance, um, so that was interesting. Did that for a few years and made sure I was diversified and not just only in the stock market, only fully exposed to this. And I've been doing that, the past 10 plus years now. Um, you know, I share my account value, account size, performance, but then I also show like when I take money out. I back in the day, I started with 5,000, but as I grew, I'm like, okay, I'm 21 and I have a really large account that is life changing for many people. I don't know if I want to just keep trying to chase this goose. So what I did was I took a chunk of money out, diversified, right? I still do that now. I just recently, I took a large sum of money, just the last few months, took it out. So I share that with social media, my students, and following as well, because it's important to diversify. But a lot of people get a bit ahead of themselves. They have a $5,000 account. They're like, "Where's I want to diversify?" I'm like, hold on, like you got to use your money to grow it. Like, I'm talking when I got to seven figures is when I started thinking, okay, I can diversify now. Whether it's real estate, active businesses, all that kind of stuff, right? And I'm more of a traditionalist in a sense that I don't use credit, meaning like I use a credit card, but I pay it up. But I'm saying I don't use debt, even for a mortgage. So I'm old school, and I've always been this way. Uh, so for me, if I take money out, I'm taking it out to either buy something up front. So like, some people could buy this car or that car, and maybe they have a car payment or a loan or lease. That's not me. If I'm taking money out, I'm using it mostly in a productive way. But if I'm doing something to make a large purchase, like just recently I bought a house and I bought it up front, um, it's a brand new build. So I'm like, okay, I don't want to have a mortgage, and that's just me, right? Um, and I'm fortunate to be able to do that, right? So it gives me the ability to do what I do, plus make sure that I keep my expenses down, make sure that I don't have it on my head. I can go to sleep knowing I don't owe anyone a single penny. Old school, I know nowadays it's easier said than done. I get it. It's hard to just say, "Oh, I'm going to buy this house up front." No, like it's hard, right? Obviously, depending on where you stay. Over here, it's like, oh, most people will not be able to afford a house ever, maybe in cash. So they I because I've been worked in banking, I remember having 60-year-olds come to me and they're like, "Hey, Riz, I have some investments, but I also have my house," and they're like in their 60s and they still have, you know 100, 200, 300K left on the mortgage. I've seen that myself. So, and I know even now, especially now, more than ever, the affordability crisis, the inflation, you know, cost of borrowing being higher. It's tough. It's tough out there.
Absolutely. You've been teaching a while now. How many years?
Yeah. So I started Riz International initially back in 2012. So the funny thing with that is I created this company here locally in Canada. It's a Canadian, it's a incorporation, so it's a company, and I originally created it because when I bought other businesses, the goal was I'm going to buy under businesses under this entity, and I did. And then eventually, I'm like, I want to showcase and share my journey, my experiences trading, and obviously Instagram was relatively new. And I'm like, okay, I like it. I'm gonna I have an iPhone. The app just came out. I'm going to start on that. I started very small and just posting here and there. And it started morphing into this thing that I'm like, whoa, okay, we're growing. People actually care to hear what I have to say or show. Like, wow, okay. And then it became this thing, okay, I already have the incorporation. I already have the name, Riz International. I'll stick with it. Um, and that's where it was. So I've been really, yeah, it's been roughly, you know, 10 plus years. But the time in markets obviously has been about 17, 18 years. But of course, I didn't, first year, second year, couldn't be like, okay, I'm going to start teaching people. No, absolutely not. I mean, there are people who just start a couple years in and it's sketchy, but hey, that's a whole other topic where they're a couple years in and God knows if they're even making money. But all right, they're a mentor and a coach. And anyways, yeah, it's wild. It's the Wild West. And I had to learn that the last decade, especially post COVID, where every Tom, Dick, and Harry and their dog was a trader. And with the advent of social media, everyone being on their phones, everyone being at home, oh boy, there's a lot
Yeah,
of
I think a
garbage
lot
out
of
there,
people
a
got
lot of
burnt. Yeah.
nonsense, a lot of nonsense. A lot of people were damaged, hurt, and I, to me, it was very disheartening. I try and combat that, but it sucks because it's very depressing because you kind of talk about one person who's doing something sketchy, but then there's like 10 others that just come in place of that person. So I was like, wow, this is like severely impacting me from a continuation standpoint where I'm like, it's really putting a bummer on something that I take seriously and I love, and the way that I do it, it's just putting a damper on it, right? It's like, so I'm like, you know what, I gotta kind of, I'm aware of what's going on. I try my best to let people know that, okay, this isn't accurate, this isn't real, this isn't the truth. You got to be careful what people kind of project and share and say, because a lot of it is nonsense. But I had to kind of step back from being so focused on trying to call out people that were literally faking it, and being like unethical and defrauding people, really, for lack of a better word. Um, so that was disheartening. But hey,
Yeah, it's life. Yeah, I know. And how do you teach? Do you teach in small groups or at different levels, like beginners, then slightly more advanced? How do you?
so initially I used to do like one on one. In fact, it's funny because, again, initially back in 2015, 2014, one on one, like via Zoom. It wasn't Zoom, like it was WebEx. Zoom got a lot of prominence after 2020, but it used WebEx, Cisco WebEx, and all that kind of stuff. But it's funny because my first students are still around and they're part of my team, but they're my first students, and I was back then. Eventually, I started getting more people to train that I'm like, oh, like I'm losing my voice because it's like 15 hours worth of lesson, not all at once, but I'm like, teach one person, teach another person. I'm like, I'm losing my mind having to cover the same thing again and again. I don't know how teachers do it, in class again and again and again. I'm like, I can't do this. So what I did was, to be able to scale, help people, and be able to also free up my time so I can focus on trading, which is my bread and butter, which is what I specialize in. That's what I care about most. Obviously, I care about teaching and helping people, but I don't want it to be the opposite way. A lot of people online are opposite. They don't really make money trading. They don't even trade, maybe, but they're, a coach or a mentor, or a guru or whatever. That's like putting the cart in front of the horse. Like, it's just stupid. In my eyes, it's just wrong. So for me, trading is my main focus. I have other things, of course, teaching and the community and the groups and students is big, but what I did was, eventually I said, okay, I'm gonna take the one-on-ones that I do, this curriculum that I've created, and I'm going to make it into a course, and I'm gonna make it into like a structured, course. Uh, and it's, in the current iteration, we cover stocks, like from basics all the way to options to advanced, like, and the stuff that I do and the way I do it. I'm not just like reading off of Google and like picking things up from like Investopedia. Like, this is stuff, and the way I explain it and the way I implement it. And it's about 26 hours of video courses taught by me. And it's a full curriculum. And that's the way I do it now, because just for time, efficiency, and because I don't, and people get to go through the content at their pace. They have access to it forever. We don't have to worry about those scheduling thing. It's a lot easier, and I think people, from getting feedback, they're like, we appreciate it because we can go back and just watch a certain section. We can refresh a certain section. We don't have to go through the whole thing, but certain parts. Fantastic.
So, if students have questions for you, how do you manage that?
Sorry, what was that?
If students have questions for you, they're a bit stuck or they
Yeah,
don't understand something,
yeah.
what
So
do they
what I
do?
do is, when they finish the master class, I tell them, because I do touch points. So I send them emails like 2 weeks in, and I'm like, okay, how's it going? And they can respond back. I respond back directly to email, and then I'll touch base a month in. I'm like, okay, you should be at this point. Average person spending this much time a week. You should be by here. And I know things happen in life, so I'm like, okay, whatever it is. Some people get back to me. They're like, okay, I'm almost done, or like, I had things happen. I'm kind of behind. Okay, that's great. So they are interacting with me in that sense. And then once they're done, I give them the opportunity to get on a call with me to go over their questions, or really kind of pick my brain. Maybe they want some clarity, or they want some more, I would say, insights around certain parts or certain strategies, then they can do that, right? So they have the accountability from me directly, and they also have that after completion support. But I want them to go through it. I want them to, complete it. And maybe some people go through it and they're like, Riz, I'm going through this section again, all over again. And they're like, there's so many things I didn't pick up the first time around. And I'm like, wow, that's fantastic. And then whatever questions they have or things they want to touch on, they're going to call with me. And then we go through it and then kind of flesh out some of the gaps that they may have.
Cool. And going back to expectations, because we sort of alluded to that earlier, people starting in trading with options. If you started with something like 10,000 and a student followed your course and did the homework, if you like, applied the lessons carefully, what kind of expectation might they reasonably have in terms of some sort of income, say, per month? Is that 2,000? Is it maybe even more
Yeah, with about a $10,000 account.
per
Yeah, so
month?
I ideally, let's just say they're starting with a $10,000 account. Okay, margin account, so they have the ability to scale a little bit. Um, s- and I'm not going to get into the weeds of margin and the pros and cons, but ultimately they have access to capital above that 10,000. So when they're doing that, the goal is one, to generate income. Small, we're using some of the strategies. And remember, this is just one part of the strategy, right? Which is generating that income. You can still buy, sell strategically the stocks as well. So easily, if someone's doing it right, we've seen people have compounded returns of, monthly. It's hard to say. I don't want to set like a precedent, but like I've had people in a month increase their account by 20%, 25%. That's large. Like that's not, I'm not saying that's consistent every month, or something people should chase because that's when they get in trouble. But we've had people for like a year to date return, in 8 months of the year, 70%. We've had people do all kinds of amazing things, but then I'm very cautious to give them, especially beginners, a percent target because I found that the moment they have a percent target, it works against them because they're chasing this carrot. And sometimes you're chasing this carrot in an economy or a market shift occurs. We know that in this landscape right now, we're in a shifting monetary policy. These are things that when you're new, you just don't have the context. You don't have the understanding. What does that mean? Oh, interest rates going down, going up. Okay, what does that mean? How can it impact the economy? How can it impact the market? And the market itself is a complex organism. So to have all that and have an expectation of a certain return, I say first year, just practice, make a little bit of money. If the first year someone's break even, I'm like high five. You're doing good. You survived. You've learned so much, and you didn't really pay much to do it. People have had to learn the hard way. They come to me, they're like, Riz, I listened to this other guy, or like I, tried to do it myself, and now I've blown like 25K, and I'm coming to you. I'm like, I empathize. Sorry for that. It sucks. I wish you would have come to me before, but this is common. This is happening. People have to. This is a price. The market is going to take you know, it's tuition money regardless. Now you have two choices. Either you are going to make the mistakes, feel bad, um, like the big mistakes, and you're going to eventually quit or end up taking a massive loss, or you're going to approach it more, with a lot more intent and planning. And how you do that is by learning, by investing in your learning first, by not focusing on the dollar amount and how much you can make. It's like saying, you're going to med school and you're like, oh, I can't wait to make, $500,000. No, you're going to med school, you have a lot of debt, you gotta get the pass, you're gonna have to go through, the labs and the exams and the residency. Then you can think about, all that. Same way with trading. Sure, everyone wants to make money from the beach. Everyone wants to make hundreds of thousands, a year, if not more. But to get to that level requires a lot of time. Requires years where you're not making anything. Requires years where you've lost some money, right? So I'm very, very cautious, and I never ever want to sell people like a false dream or this like, this false picture or this, it's just not me. And a lot of people get sold on that because they're like, I can make $5,000 every month with a $10,000 account. No, because that's 50%
Yeah,
monthly.
it's huge.
It's ridiculous. It's ridiculous. I'm like, guys, you got to use, like, think. Even Warren Buffett is not doing 50% a month. Like, Warren Buffett, on average, over the last, 40 years, his average annualized return is like 13 or 14%, right? That that's the difference. This is a game of compounding. It's a game of time and consistency. And for me, I've done well. I mean, I don't like to throw numbers out, but for me, I'm not doing 50% a month. I'm not doing 25% a month. I'm trading large amounts of capital. My thought process and mentality and approach to trading and the risk that I take is very different to when I was trading, with 50K. It's very different to when I'm trading, 2 mil. So that's why I always tell people it's relative to the individual, where they are in life, their experience level. There's guys that make, you know, 15% in a year and they're like, I'm beating the market. And I'm like, that's fantastic. You're beating the market. Like, if we're doing this, ideally, we do want to beat the market. Ideally, that's obviously the case. Otherwise, what's the point? And I'm not saying that's what you got to do the first year. I'm saying you got to generally be doing that. If you're a few years in and you're still struggling and you don't know why, you haven't gotten someone to kind of take a second look and help you, and you're like, you're not beating the market, then you got to take a hard look at yourself and be like, what am I doing wrong? Can I address it? Is this right for me? Am I working against myself? Because at that point, it's like opportunity cost, right? Uh, I'll be the first person to say that not everyone should be trading. Trading isn't for everyone. Everyone should participate in the market, but they can do so in a more hands-off approach, in a way that it doesn't cloud their judgment and they get stressed out or make crazy decisions. It's more passive, more hands-off. I think everyone should invest because, especially now, it's needed more than ever. But for those that want outsized returns, that want to not be like the average, they want to excel and master a high skill, highly rewarding craft. That's where I come in, and that's what I do. A lot of my time goes into, I don't want to say rehabilitating, but like getting people to understand the right frame of mind, the right expectations. The moment someone's like, Riz, I make, $15 an hour, I have $2,000 to my name, I want to start trading, but by there's 6 months left in the year, I want to quit my job and then only trade. I'm like, I mean, I'm rolling my eyes, but not in a judgmental way, but I'm rolling my eyes because I'm like, this is a recipe for disaster because this person, and maybe not from their own fault, it's just because of what they've seen on social media and the nonsense, their perception and their expectations is warped. They don't know any better. They don't realize like the average market goes up 8% annualized, right? It has years where it's down 20%. It has years where it's up 20%, but average is 8% annualized return. You can't be coming in with your 2 grand and quitting your job, and then even if you're making 20%, let's say you're a rock star, you're making 40% that year. Okay, you turn 2 grand into nearly 3 grand. Can't It's like people don't understand this, and then when I say it to them, they're like, oh. Then they feel like, oh no, like, oh, okay, like someone like said, explain the holy grail or something, because they don't understand that, holy crap, the amount of capital you have makes a difference. The percent of return that you can generally get and make that's reasonable is going to dictate that. If you're looking at making 1,000% return the first year on 10K, sure, okay, but good luck getting 1,000% return. Like, you know what I mean?
Yeah,
Like,
it's nonsense. Yeah.
not happening.
Yeah,
Like,
yeah. I mean, even 25%, you're going to make 25K a year. It's not like you can just retire from your day job.
yeah, yeah. With
It's,
a hundred
it's
k
not
account,
enough.
yeah, with a 100K account, if someone making 25K in that year, bravo, that's great. Is that enough to quit and live a fantastic life? No. In fact, a lot of people I speak with, they know better now. That know me, but those that are new and just getting introduced to me, I tell them like, look, are you working? Do you have a main source of income, whether it's a job, career, or your business? keep that. You want to have that. I know that's not what you want to hear. I know you want out of the rat race, out of the 9 to 5. I get it. But to do that, you got to do the first steps. And the first steps is investing in yourself, your education, learning, the skill set, and then ramping it up. It's like, how do you become a brain surgeon? You don't just become a brain surgeon because you're like, I had a dream and now I'm a brain surgeon and operate on people. No, you got to go through the steps. You got to take the basic courses, then you got to go to med school, then you got to do your residency, then you got to spend years and years doing this, and then maybe you end up becoming a brain surgeon, and hopefully you're good and save lives. But it's a process, and I wish there was like, all right, we can retire or we can quit our job and I can just trade for a living. The reality is not like that. And I believe 95%, I would say almost, if there's 100 people, I would say 98 or 99 people out of the 100 should not be trading solely for a living, because this is a very mentally exhausting and mentally, I would say, it's a drain. And day to day, like 1 day, 2 day, a week, 1 month, fine, you'll trade, for a living. uh when you're doing this like me, I'm 33 years old now, and this is my 18th year. And I kid you not, Nicholas, I feel like I'm probably 53. I joke around about it. People are like, "Oh, Riz, come on, we're 40, we're 50. Like, you're making us feel bad." I'm like, "No, no, I'm not, and I'm not screwing with you." And again, it's not just the trading. Life takes its toll, things happen, and I'm not gonna go into all that. But like, yeah, this is a big part. Like, I've sacrificed a lot, and I'm not asking for pity or sympathy. Everyone has their challenges, but to me, it didn't come easy. A lot of things that come easy to other people didn't come easy for me, and I'm like, trading's one of them. And I had to stick to it. There's times where I've lost like 160K in a trade like that one
Wow.
day because of a
How
tweet.
how did you recover mentally from that? What did you
Yeah, it was a
do? What
lot,
was your
and
process?
I've lost I've lost large amount because it was a black swan event. But ultimately, how did I recover? I maybe took 3 days of not trading, and that's it. 3 days. 3 days I grieved. I mourned 3 days. I kid you not. I was like, I when I lost that money, it wasn't the money that I lost. It was the way I lost it because it was a black swan event. The math, because I'm very like analytical and I'm like probabilistic in a way, and I'm like, the probabilities of this happening are like, literally, I mapped it out. I'm like 0.01%, and it happened. These things happen. There's people. There's you know mathematicians, rocket scientists, at quant hedge funds that can get it wrong, because black swan events are just that. Even the slightest, most tiniest probabilities of happening can still happen. Is it likely? No, but they can still happen, and we've seen that, right? We've seen hedge funds blow up, like, because just the tiniest of black swan events. So that's what happened to me. Um, I
What were
didn't
you
blow
doing?
up.
What were you trading?
I was trading options, but I was trading options on GameStop back in 2021.
Oh no, and you were the wrong way.
Yes, it was on the wrong side, but
Yeah,
probabilities wise, rationally, it made sense. It was like the smart trade, because it already gone up like 500%. I'm like, I'm going to step in and I'm going to
short it.
go again, not just short it, but I'm going to short the options on it, which eventually means that I wanted to stay below a certain level, but it went higher than that. So then I took delivery of the shares short. And then, because options are obviously leveraged, and I'm already short, and I'm taking delivery of like a few hundreds of thousands of dollars worth of GameStop short. That's a lot of exposure. Uh, yeah, and I promised myself, one, I will never get to that point, because for me, I've been trading options this way for many years, but no one, even Warren Buffett, anyone, no one had gone through this black swan event, which is a meme stock. There didn't exist. This word didn't exist. Remember, 2021, by the way. This was end of January, start of February. Uh, and I remember I was like, okay, well, this fine. I gotta carry this. I'm gonna hold this. It's fine. Um, and then there was a tweet that came out from Elon Musk, uh, after hours, and he said, "Game stonk." Okay, it was just that tweet because he was jumping on the bandwagon in the Wall Street bets, and everyone was mainstream at that point. It never happened. There was never a bankrupt retail video game store that's bankrupt, on the verge of bankruptcy, and it just goes up 1,000% in a matter of a few days, and it's just frenzy, and it squeezes the shorts and all this stuff. Like didn't exist. None of this have happened before, and that's why we've seen billion-dollar hedge funds also go under because of this. Melvin Capital, all that kind of stuff. So I'm like, yeah, I'm small fry, I'm small fish in this, but I'm on the wrong side. I'm like, I can still carry. And then that tweet happened, and I'm like, I don't know if we're allowed to swear, but I'm like, I'm screwed.
Yeah,
I
totally.
want to use more colorful language, but
Yeah, yeah.
I'm like, this is bad. I'm like, this is over. And you can't do anything because with options, you can't trade them after hours. So you can only trade them, during market hours, 9:30 a.m. Eastern to 4 p.m. Eastern. So I know what's coming. I know that I'm screwed. I'm in trouble. And it's like 5 p.m. Eastern, but there's a whole night until 9:30 a.m. And I know the damage is going to, because I can do the math roughly. And I'm like, I know what the damage is going to be roughly. And yeah, I just,
And so before it happened, before you actually
it
knew
was
what the
it
damage
closer.
was,
Yeah,
what was it? You were looking at like 50K
so
under,
before it
and then
happened,
it
I was
became
down.
160.
Yeah, I was probably down before that tweet, before that evening. I was probably down like 50K or something, 60K. I would say
Yeah,
maybe
bad
max
enough.
half. So my unrealized loss doubled because of that tweet. And then I couldn't do anything about it either because it was after hours. So what went to being something like, I'm okay, yeah, it sucks. Lesson, not the end of the world. To draw down, but it's not a loss yet. It's going to come back down. It eventually did. My thesis was right. Um, it just, that's the thing, right? You can be right, but if you're not right within a certain time frame, you end up being wrong or losing money, right? And I was right. The stock eventually went down, and it just got hammered, and it was just. And after that, I said I will never, ever, ever get to a point where I'm forced to close a trade. Ever since then, that's never happened. And in fact, I had a personal vendetta against that GameStop stock, and I said the 160 grand that I lost trading it, I'm going to make that back and all from that stock. And I did that over the years. I did that, especially this year too. We had that pump with Roaring Kitty coming back, and that was another nonsense. But I made money on that too. Like I never ever I made sure I never ever got caught out again. Um, not just in GameStop, but any stock, and I made more than enough money off of it now to the extent where I'm like, hey, I learned the lesson. I realized I went through a Black Swan event. I went through all this. It was learning. It was like really built me into the trader that I am. But over, a span of some time, I made more money on top of it from it. So I'm like, I came out ahead. In that moment when I was down 160K, and again, I'd been trading for a long time at that point. I'd seen large losses, but not like that. Not like based on a garbage company, based on a tweet, not in that way. And that, the way I lost that and the way it happened, that really hit me. And like, that's why I said, and never in my life had I stopped trading for like 3 days because
Yeah,
I
it's
didn't
like being
freak.
hit by a drunk driver, isn't
Yeah.
it? It's just out of
You don't
nowhere.
want to get in a car. You don't want to get on
Yeah.
the road again. Right. So I was like, I can't, I got to get back in the saddle. But I'm like, no, I'm going to give it a couple days. I felt sick to my stomach that night.
I
And
bet.
then I came back. I came back 3 days. That was it. My grief, my pain lasted 3 days. And then I came back with a vengeance. And as they say, the rest is history. Um, yeah, it was an extraordinary time. Yeah, so I even recorded that $160,000 loss, like a couple ways. I had the Interactive Brokers, which is a brokerage I use, large, regulated, one of the largest brokerages, great brokerage, and I took a video of showing the daily loss on that because I'm like, it's important to be honest and transparent. Like those that were with me in the community, in the trading community, knew what was going on. But I wanted it also to be a way, like open and honest and transparent for people to see outside of that, and whether it's on social media, whatever, uh, to be able to see, like, okay, look, like black swan events, like these kinds of things. It's unprecedented. It can happen. The important thing is that you survive. Remember, never be in a position where you have what's known as risk of ruin. So even though I took $160,000 loss on that, I didn't blow up my account. I didn't end up zero or negative. I didn't end up imploding my wealth or whatever. Yeah, 160K. I'm like, I could think of 160,000, different things to do with that. But it wasn't the end of the world. I mean, I'm fortunate, right? 160K, like when I think about it, I'm like, fuck. Like there's a million things that went through my head. I'm like, I could have taken this money and donated it, or I could have just used this money and like bought something. Like I don't know. There's a million things that go through your head, but I'm like, no, no. I knew what I was doing. I accepted the risk. I did it. I knew that it could pan out this way, but the odds were very, 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 very slim. But whatever, I've made. I'm fortunate, knock on wood, to have made millions and millions because I'm like, yeah, I wouldn't trade it. I wouldn't change it for a thing. Uh, and I know it sounds cliche and cheesy to say, but I just wouldn't because that $160,000 I lost on that, I made it all back and then some. And what I learned from that, I'd much rather learn, 2021 was over 3 years ago. I much rather learn that at 30 years old than 40 and with like maybe 200, 300,000 or whatever. So that was my mindset. Maybe it was a coping mechanism at some point, but I was like, fuck it,
I think you have to have that mindset to get through these things, don't you? You
Yeah.
have to spin them round because otherwise you're just going to get knocked down.
Yeah, and I
You
think
know,
the reason I'm able to do this so cold-bloodedly, and people in the community that access to my trades, they see what I do, enter, exit in real time, all that stuff is transparent. They always say, Riz, like nothing phases you, and that's true. And I think it's probably because of people are wired differently, but it's also because of the experiences that we've had through life. Like I've had an extraordinary life, uh, and it feels like I'm creating my own like memoir or something like that. But like I've had an extraordinary life, but an extraordinarily challenging one as well. So I think that allows me to go through this extreme levels of pain. And I tell people like I'm human just like them. It may not seem like it, might make it look easy sometimes, but I'm human just like them. But I still feel pain. Like I feel the anguish, the agony. I don't know what the concept for it is, but like when we feel happiness, you don't feel as happy. But when you feel loss or sadness or sorrow, you feel that more powerfully. Like how we feel pain more powerfully than we feel euphoria being good. Like what I'm saying? Like there's this, I can't remember the concept what it's called, but it's a psychological concept that's true. We feel the negative emotions more strongly, more vividly.
yeah, we
So
do. Yeah.
and I'm like, it's like the opposite of what you want it to be. Like you want it to be the opposite way. And even in trading, you want positive asymmetrical uh risk. With this, I'm like, when I make money, I don't feel that happy. Like I'm just like whatever. But when I lose money, I'm like, oh, I hate losing. I hate losing. I just hate losing. It's just one of my mental things, and I'm sure it's proven to be detrimental in some ways, but in other ways, it's just allowed me to, because I hate losing. So when I do lose, I make sure I fix it or I come back stronger so that I don't lose then in that way. So it's very much a mental thing. It's very much a lot of things that I do. I realize I'm not special. I'm not just like everyone else, but I realize the experiences that we go through are individualistic to us. Our environment, our situation is very individualistic, and some things we can control, some things we can't, and that will have an impact on our trading,
Do you
on
think
our
you
day to
had?
day.
Yeah. Do you think you had one or two, or do you know you had one or two really difficult experiences as a kid that kind of toughened you up?
Plenty, plenty. So
Yeah.
on the personal side, I don't like it's public. I've mentioned it, but I don't bring it up all the time because I don't want like a crutch. But I'm like, I've had currently 19 major surgeries. 19, yes, 1-9, not a typo. I've had plenty of health problems, chronic pain, you name it. You name it. That's why I say I've had an extraordinary life in both ends, both extremes. Great,
Can
the
you
things that I've
do you
experienced.
mind sharing what those surgeries
Yeah,
were for?
sure. Yeah, sure. So I've had, so out of the 19 surgeries, I've had two lower back surgeries. I've had one nose surgery because the nose surgery is related to the other 15 ear surgeries, both ears. So I've had a lot of hearing loss because of inner ear disease. It's called cholesteatoma. It's non-cancerous, and it's a growth in the ear, very far into the ear near the brain and skull, which uh, again is random. They don't have an answer for it, but essentially it starts growing and they start destroying the inner ear architecture. So we have three hearing bones. If it starts growing, think of it like this thing that just starts breaking the bones, snapping the bones, dislodging them, and then that's the bones that conduct your hearing. Um, so I've had many surgeries to remove that, and then it comes back. I've had many surgeries to reconstruct the inner ear, and maybe it works, maybe it doesn't. And I've had it happen on both ears. So ever since I was 6 years old to now, in fact, my most recent surgery was last year, 2023. Yeah, May, and that was about 8 hours long, um, near the skull. I remember the one before that was in 2020 December, and that one I remember they went in, we found like a hole in my skull to the brain, so they had to patch the skull too. So like, oh yeah, it's
Really? I mean, it makes a trading loss seem quite small by
oh yeah,
comparison. Yeah.
yeah. I tell people I know for a fact that people would, from what they see at face value, I'm sure they'd be like, "Oh, I wish I could be Riz, or you know, I could trade places." And I'm like, I get it for sure. I get it. I'm very fortunate and blessed to have things that obviously, a lot of people would kill for. But I'm like, I wish sometimes that I could switch places with another person or that person or this person sometimes. Um, and I think that's the beauty of life, uh, in a way, because no one will have everything, and everyone will have something, right? And whether it's the positives in life, whether it's the God given gifts or like the talents that we have, everyone will have something. And I'm fortunate, I guess, to maybe have found something I'm decent at, maybe, because many people go through their entire lives not having found it, right? So I'm fortunate in that way. Um, but yeah, it's been a whirlwind of a life, and I and people are like, Riz, you talk like you're, I don't know, like
80.
60. Yeah,
Yeah.
and I'm like, what do you want me to do, right? Like this is who I am. You know, it, and I'm not some wise philosophical person, but a lot of the things that we go through in life form our views on life itself.
Yeah. Yeah. Well, it's been interesting, Riz, and I'll put links to your courses and so on in the notes,
Thank you.
descriptions, so
Pleasure is
people
mine.
can
Thank you.
find you. Yeah.
Yeah,
Really
no,
enjoyed
I
it.
appreciate it. It was good catching up. I know we've been meaning to do this for quite some time, so I'm glad we were able to finally.
Absolutely. Great.
Right.
Okay. Thank
Awesome.
you.
Thank you so much. Thank you.